Welcome back to Investing Talk Podcast. Today, we're looking closely at ARRY Technologies. We've got a few pieces of information here, due diligence report, a company update, an investment profile. Our job is really to pull out the key insights for you, give you a clear picture of ARRY. We'll hit their recent financials, where they sit in the solar industry, expert takes, and, things to watch out for. Let's get into it. The recent financial performance, it looks pretty impressive right off the bat.
It really does. What jumps out is that Q1 2025 revenue, $302.4 million. That's, well, nearly double the $153.4 million they did in Q1 last year.
Wow, nearly double. That kind of growth, it definitely signals some strong momentum, doesn't it?
It certainly does, and they seem to think it'll continue. Their forecast for the full year, 2025, is between $1.05 and $1.15 billion in revenue.
That's a pretty confident outlook.
It is, and maybe even more significant is the return to profitability.
Yeah.
Q1 EPS was $0.02, adjusted net income per diluted share, $0.13.
Right, because they had those losses earlier in 2024, so this turnaround is definitely noteworthy.
A very significant shift. And looking ahead, they're projecting full-year adjusted net income per share somewhere between 60 cents and 70 cents.
Okay, that's got to be encouraging for investors watching this one.
No doubt. But it's worth looking a bit closer at the profitability itself. While revenue shot up, the gross margin in Q1 was 25.3%, or 26.5% adjusted.
Okay.
That's actually down a bit from Q1 2024, when it was around 35%. So it might suggest that even with higher volume, maybe their costs went up too, or pricing pressure.
That's an interesting point. So great growth on the top line, they're making money again, but the profit per sale is a little tighter than last year.
That seems to be the story there. On the plus side, though, their adjusted EBITDA improved significantly, hit $40 million in Q1, up from about $26 million the year before.
So that suggests better operational efficiency as they're getting bigger, more leverage.
Seems like it. Better operational leverage, yes.
Okay, so strong revenue, profits are back, but keep an eye on those gross margins. Got it. Let's shift gears then and talk about the business itself and the industry. ARRY Technologies, they're a big deal in solar tracking technology, yes.
Oh, absolutely. A leading global provider.
Mm-hmm.
And a key thing setting them apart, something mentioned in the reports, is their ability to supply trackers with 100% domestic content.
Right, and that ties into the Inflation Reduction Act, doesn't it? Big advantage
A
there.
huge advantage.
Yeah.
Especially now, it really boosts their supply chain resilience, compared to relying solely on global sources.
Makes sense. And it sounds like they're executing well, too.
Yes, the update mentioned their shipment volume last quarter was the second highest they've had since early 2023. So they're getting product out the door.
And the demand seems to be their order book around $2 billion at the end of March.
That's a healthy number.
Mm-hmm.
Suggests a pretty solid pipeline. And stepping back, you see the whole picture. Global electricity demand is rising, and utility-scale solar is just growing incredibly fast. They're positioned right in the middle of that.
Plus those regulatory tailwinds like the IRA pushing domestic manufacturing.
Definitely helpful. Of course, there are always risks. Even with domestic sourcing, maybe some components still rely on global supply chains. That could be a risk. And, policy changes down the line could always impact things.
True. Those are always factors in this space. Worth watching. What about the folks running the show? Management.
Well, the CEO, Kevin Hostetler, seems really focused on that supply chain resilience and keeping customers happy. Looks like it's paying off with some good contract wins internationally, Europe, Middle East, Asia.
And they just brought in a new chief revenue officer for North America, Darren Green?
Yes. Sounds like he has a lot of experience in renewables globally. Seems like a move to really push hard in the North American market while keeping that international momentum going.
Okay. So let's think about valuation and potential risks. The reports didn't give a specific PE ratio, did they?
No explicit PE. But, with profitability back and the growth story, you'd assume investor sentiment is improving, which usually helps the valuation multiple.
Stands to reason. We also don't have like a debt-to-equity number or free cash flow details right here.
Correct. Need to check the SEC filings for the nitty-gritty on leverage and cash generation. There was a note about amending their credit facility, which might suggest debt is under control, but you'd want to verify.
And dividends. Doesn't look like they're paying one.
No mention. Seems like they're putting profits back into growing the business, which is pretty standard for a company in their position in this industry.
Makes sense. And risks. Beyond the supply chain stuff you mentioned.
Well, the global geopolitical situation always hangs over supply chains. But on the positive side, no recent mentions of, major lawsuits or scandals, which is good.
Okay. How do they stack up against the competition? You mentioned Nextracker, Soltech, First Solar.
Compared to peers, ARRY seems to be showing a really strong revenue rebound lately, and those international wins are notable. We talked about the slight gross margin dip,
Right.
but that big jump in adjusted EBITDA looks favorable.
And their edge seems to be that combination of the physical tracker hardware and their smart track software.
Exactly. That's a key differentiator. It's not just the steel. It's the brains behind it, optimizing energy capture. That integration could be really valuable.
So the market seems to like the recent news. Q1 earnings got a good reception.
Generally positive sentiment, yes. Analysts seem pretty favorable on their tech and the growth path. You see some chatter on social media too, mostly optimistic, though people are aware of those supply chain questions.
Okay, looking forward then, what should people be watching for? Catalysts.
Well, the next earnings report, obviously. See if they keep this momentum going. Also, any news about new products, maybe enhancements to SmartTrack or moving into adjacent areas in solar, that could be a boost.
And the risks remain the same: potential regulatory shifts affecting incentives and those persistent supply chain pressures?
Those are the main ones.
Yeah.
But the long-term picture, push for renewables, ESG investing trends, those fundamentals seem pretty supportive for the sector overall.
So wrapping up the investment profile based on these sources, Array Technologies looks like a serious contender in utility-scale solar tracking.
I'd agree. A leading specialist, strong products, especially with that SmartTrack software layer, and the recent numbers show that growth and the return to profit quite clearly.
Key strengths seem to be market leadership, that integrated hardware-software, beating recent forecasts, and being aligned with ESG trends.
And the potential flags or things to watch are those global supply chain vulnerabilities, even with the domestic focus, and just the general competitive landscape.
Overall, though, sentiment feels positive, mostly thanks to the recent performance and their technology. The take seems to be maybe a hold or a moderate buy, but you'd want more financial detail and to see this performance sustained.
That sounds about right based on what we have here.
So what does this all boil down to for you, the listener? Array Technologies is definitely riding a wave of growth, and they've turned profitable again. Strong market demand and that strategic focus on domestic content are really helping them.
But, as always, it's crucial to do your own homework. Dig into those SEC filings for the debt picture, the free cash flow details. And keep an eye on that gross margin trend in future reports. See if it stabilizes or improves.
And remember, this is a fast-moving industry. Stay updated on regulations, subsidies, any shifts in the supply chain dynamics. It all matters.
One thing that really stands out, though, is that focus on combining the hardware trackers with the SmartTrack software. It feels like a smart, forward-looking approach to squeezing more energy out of these solar farms.
It really does, and it raises a key question for you to think about. How will that integrated approach keep them ahead of the pack as this market gets even more competitive? Something to mull over.
Definitely something to consider.
If you found this overview useful, please do subscribe, like, and comment. It helps others find the show.